All right. Welcome to episode 3 of the broadcast. I'm joined again today with Brian and Michael. Welcome, guys. Welcome back.
It's good
Glad
to
to
be
be
back.
back.
Yeah. So in the broadcast, every 2 weeks, we look back on stuff that stood out to us with regards to Bitcoin. Content, videos, tweets, articles, news segments, whatever, like things that we would like to broadcast to other people. And we're going to chat about the different items that we brought. And the first part is always a bit short. Then we dive a bit deeper, and then we have some bits that we think are bullish or bearish on Bitcoin. And I think we should just kick it off and show this tweet that I don't know. I think this is Brian. Oh, this is mine actually. I saw this tweet and it said it's by Corey Clipston. He said, "You cannot hate Ethereum enough. Massive drag on Bitcoin adoption and advancement of individual freedom and economic liberty for more than a decade via false narratives and orange washing affinity marketing." And I just wanted to highlight this because actually today I'm releasing a podcast where with Jesse Myers where we talk about the fact that there are 37 million altcoins and that Bitcoin still wins because you can only discover absolute digital scarcity once. But yeah, we also talked about how like Ethereum and crypto such a distraction that me and Jesse also both fell for. I don't know about you guys, but I've been distracted with ICOs and NFTs and Ethereum on my Bitcoin journey. So yeah, this is something I wanted to highlight, and yeah, there were many like replies to this tweet, and kind of like my thought here is, the path is the path is the path. Like Bitcoin is just out there. Anyone can study it. Anyone can adopt it. Anyone can copy it and try to make a better thing if they don't really understand what it is. Well, we're seeing 37 million altcoins that don't really amount to anything, and I do think it was a distraction as well, but yeah, it's also kind of necessary. It's just anyone can build anything they want on the internet, right? So yeah, that's just what I wanted to start with, and I'm interested to hear your thoughts.
Yeah, I would say it's still surprising to me how much sort of cope there is on Twitter, particularly from Ethereum people. Like even just this morning, scrolling through Twitter, I saw someone saying like, "Well, Ethereum's just a better version of Bitcoin." Like he was literally claiming it was more secure. And then he was like, railing on the energy component of proof of work and why proof of stake is better. And some of the replies were like spot on, like, dude, you're delusional. But like Ethereum derangement syndrome is real. There are still people who, despite ETH BTC being down like 60% over the past 12 months, are still clinging on to it being valuable in some sense, or even comparable to Bitcoin, which, it's not. They're two different things entirely. But yeah, it's still surprising to see that there are people
Yeah.
clinging to this.
Yeah, you guys said it best. I don't have to reference Ethereum. Like I would tell people before, there's no difference between Ethereum and Rocket, and it would piss them off because they were TradFi people coming in. And they're like, "What do you mean?" It's like it's all the same. Like it legitimately is. I think we're recognizing that. The thing that on that tweet, or most people are recognizing that, specifically with Solana and what it's doing. But that tweet on the orange washing is what sticks out to me because just because somebody, adopts Bitcoin doesn't even mean like that there's no shortage of things like what was it, the EOS ICO that put 220,000 Bitcoin in a treasury and sold that. There's a lot of derivatives from Bitcoin that people like affinity scam and get close to it. And so like we're not going to just move away because Ethereum kind of dies or people recognize that there's going to be other assets and other things that are going to scam people's Bitcoin because this is just like the creation of finite scarcity and nobody knows how to really handle it. So I think that's just a threat or something to keep in mind.
Yeah. Yeah, I agree. I the orange washing part is more like, yeah, you're riding the coattails of Bitcoin, right? I actually just tweeted they're called altcoins for a reason. Like just try to create your own lane. But I think it's good. People are seeing now, this huge divergence. Where you have these tweets where that show like last time Bitcoin was 88K. Ethereum was like 3,000. Bitcoin is 88K again. and Ethereum is like 1600 or something. I don't even know where. I don't even look at the price, but yeah, it just takes time for people to figure it out. I think that's the core insight here. All right, next one. I think we'll get Michael back in a second. Next one is something you brought, Brian.
Yeah, this is me. So this was just a tweet highlighting a chart showing Bitcoin's volatility relative to stocks in sort of the very recent period, year to date, and then you can see just in the past several weeks that it's actually, Bitcoin's volatility is actually lower than stocks. And so this stuck out to me because it's like, not only has Bitcoin outperformed most assets in this recent period, really since the tariff trade war sort of kicked off, and there's been, heightened uncertainty around markets in general, but it's actually done so with lower volatility, specifically relative to stocks. And so I wouldn't go as far as to say, like, I expect this to hold and continue, because I think Bitcoin will continue to be volatile. The key insight, which I can add to this, is like, yes, Bitcoin's volatile, but what most people don't realize is that its volatility is actually positively skewed. And what that means is that basically it punches up more than it punches down. And that is very unique relative to basically all other assets that exist, in that most assets' volatility is negatively skewed, meaning, it goes down more than it goes up. And that has resulted in, most TradFi people and most normies who think about volatility associate volatility as a purely negative thing and like always inherently bad. And that's just not the case with Bitcoin. Like, the volatility is actually a feature, not a bug, and it doesn't equate to risk. And so I think this was interesting, from a few facets, but I always anchor it back to, like, there's a lot of misconceptions around volatility in general, and specifically Bitcoin's volatility in the context of, if it's a piece of a broader portfolio, it actually can boost the return profile and dampen volatility because it's uncorrelated and, again, positively skewed. So little in the weeds there, but that all of that is to say, like, volatility is a feature, not a bug, specifically for Bitcoin.
Yeah, I think on that's an interesting aspect that when you hear individuals bring up volatility, it's what Brian referenced. They're referencing the equities markets, and when you have volatility, it's usually to the downside, and it's also because there's a company that either lacks fundamentals or there's some like speculation happening, and so it scares people, versus the volatility to the upside that Bitcoin lives in. But I think the other part, as it relates to volatility, is I think I think over time it dampens with Bitcoin, but over the next, call it still 5 to 10 years, we're going to see a highly volatile market across all markets because of the amount of liquidity in the system. And I think the thing that lulls people to sleep is in the equity markets and bond markets, you have people that can step in. You can turn off the circuit breakers. You can, backfill swap lines and insert liquidity. But the problem with Bitcoin is when you have that volatility that the traditional financial TradFi Wall Street doesn't understand, that 24/7 open on weekends. If you go look at the lending markets, all the volatility and the deleveraging happens when it's the market's most illiquid. It's holidays, bank holidays, and nights and weekends. And so point being is, this is how I see a lot of assets being lost, is with the volatility when they don't actually know how to manage it, specifically around risk and all the loans and leverage that's going to be coming into the system with the amount of liquidity. So I think it's not directly related to your volatility, but it just came to mind when you reference volatility, that I do think it's something to watch out for, because that's how people are going to lose their shirts in the space.
Isn't it insane that they can just halt the stock market? Like, if it's moving too much, they just halt it. Like, that's always just fascinated me that's a thing that happens.
I think people forget that they turned off Robinhood, and they were about to take the whole financial system down with it. Like, that whole setup was pretty haywire, and so they can turn off anything except for Bitcoin.
I mean, what you just said, Brian, is something I've been actually thinking about the past 2 weeks. When was that, like 2 weeks ago, when the stocks went down maybe like 9%, not even 10%, which in Bitcoin is nothing. But I think it was in Korea or Thailand. They made short. They stopped the shorting, so you couldn't short anymore. Like it was too low, and then they turned off like all the short stocks. Like you couldn't short anymore. And there was also a circuit breaker, I think.
Free
that was
markets,
in
free markets,
Japan.
huh? Free markets.
Well, I mean, it's a signal that you're playing a game that is not a free market, right?
Yeah.
So there are outside forces that control this game, and if it goes down too much, they can actually pause it. I think that's one signal, that should show like, okay, what's this game that I'm playing? And on the other side, I think it's a signal that in a fiat money system, the stocks should always go up, because that is growth, and nominally. And I think it's just fascinating, but still, enough people play the stock market. So yeah, what are we talking about, guys? All right. Next one is from Michael. Yeah, I don't know. Did you see this, Brian?
Yeah, this is a good one.
Oh, this hurt my eyes and my ears. But
Yeah.
Michael, maybe a little intro here.
Yeah, so the theme across two things we're going to show is, we can only do like 30 seconds of this, however long that gets the point across, is that the crypto scams are only going to increase from the affinity orange washing, because that's effectively what's happening in this clip we're going to show. But then also the sophistication is going to be unfathomable in how hackers and bad actors are going to take people's Bitcoin. So to just be aware of that.
Yeah, we didn't prep in the sense that I got like the right part, but this is Barry Silbert, a former Grayscale founder, CEO. That I think you said, Michael, he could have been a billionaire, but I think this is even I said what an idiot. But I also think like he's like the master fumbler, and now he's back supporting Tau, BitTensor, some crypto. And just like scheming and actually saying somewhere in this interview, yeah, it's just like Bitcoin, and yeah, it's just so incredibly disingenuous. And although I've learned some things along the way from Raoul Pal, I don't understand why he would give a podium to this. But yeah, let's hear the pitch.
It was a fair launch. It's just like Bitcoin. It was a white paper that was then turned into code that then launched. And by the way, it has the same token economics as Bitcoin. So it's got 21 million cap. It's got the same halving concept as Bitcoin. So it's very, very easy to understand. And what has happened over the past few months has been called an upgrade of BitTensor, where the subnets that we just talked about, each one of those subnets actually now have a token. OGs, we are.
Yeah.
I mean, just getting to the sentence, there are subnets with tokens,
They each have a token. Thank God.
Thank God.
The second part is where I think at the end where people are going to get trapped, and this ties into maybe Bram, if you pull up the second link and scroll down, that you're going to get a lot of boomers and unassuming individuals come in and hear narratives. And what he tied this to at the end in the value prop was that it's greener, and that it references that Bitcoin spends $10 billion on wasted energy, and that they could take that money and better the world, and that's what they're using. And like, that's just a narrative people like. It's the same thing as the ESG, and that we're all boiling the oceans because of, the lights being on. And so that's one side of it. This other side that Bram just pulled up was a report that said in 2024 alone, and I know we get like, lulled asleep by these numbers, but $3 billion is an insane amount of money to be lost from people over 60 years old via crypto scams. And so like, if you scroll down, there's a chart here that was pretty interesting that shows how it skews right there over 60. And you can see that. And the way I think about it, and this might sound funny, but if you ever, remember when Snapchat came out like 5 years ago, and you start flicking and you go left, right, up, down, it's pretty straightforward. But if you ever handed that to somebody over like 45 years old, they literally look at the screen and not know what to do. And I think of like digital assets in this. We talk to people all day long that are clicking the wrong links, sending Bitcoin from Coinbase to this false wallet that's not there. I heard 2 this week. It's just something to very much be aware of, because this is what keeps everyone away from buying Bitcoin, is they're just afraid they're going to lose it all. So yeah.
Yeah, that's well said. I think you're on mute, Bram.
Yeah, it's a new.
But yeah, this stuff's only going to accelerate, to Michael's point. Like, particularly as Bitcoin continues to appreciate and monetize. I think we're just scratching the surface of literal criminal networks being aware that these types of assets are so easy to scam people out of, particularly if they're holding it on an exchange, or if they are holding private key material on their person. You could physically attack them as well. And so I unfortunately think all of this stuff is just going to continue and accelerate as the monetization process of Bitcoin in particular continues, and more people wake up to people holding immense amounts of value in subpar custody formats, basically.
Yeah. I only wanted to add a stupid thing that I don't even know how to use Snapchat, right? Like Snapchat, the way that UI is composed, like I am not even able to use that. But that's more to add to the point that Michael said. Like I do think that goes really quick, right? The how much people understand a certain way of how digital products work, and I think it's very interesting to see that over 60 cohort is so overrepresented. But in general, of course, people try to scam that cohort. But pretty crazy to see that it actually is also that big in crypto. So for the next part, where we go a little bit longer, a little bit deeper, I think we start with what Brian shared. And I saw you shared this tweet, which I also referenced just now. So
Yeah.
I was thinking of showing that first, but maybe share.
We can
start
start here. This is sort of the precursor to the next tweet we'll show and the chart that I put together. But this is just basically describing the ETH BTC ratio of the past couple of years. And so if you go to the next link that I provided, this is sort of just I wanted to take a look at Bitcoin dominance. This is something that Michael and I have talked a decent amount about on the last trade. If anyone listens to the last trade, I'm pretty bullish Bitcoin dominance continuing to grind upward as it has for the past 2 years, really since FTX. And I think if you look at the entire history of how Bitcoin dominance has sort of evolved, it was in the 80s to 90s for many years, and then in 2017. Sort of the ICO craze, Ethereum started to gain some traction in the market, and you see BTCD really decline pretty meaningfully, down to almost like 30-40% in that sort of peak euphoria of that ICO craze. And then it starts to grind back upwards during that subsequent bear market. And then, you have this second wave of euphoria driven, by similar things, right? Like vaporware, altcoins, NFTs in particular this time around, DeFi, were the sort of flashy, hype-driven things that accelerated altcoin market cap to actually exceed Bitcoin's market cap. And you see again, Bitcoin dominance dips back below 50%, goes down to about 40, and then FTX collapses, and I think that's when in my mind it's sort of started to manifest more broadly and permeate that like a lot of the things going on in the altcoin market are really just scams, as we've been talking about, pump and dump casino, meme coin driven type stuff. And you just see Bitcoin dominance just grinding upwards. It's not as sort of choppy as it has been in the past. It's literally just sort of grinding upwards. And I think the other takeaway here is like, the altcoin space in general has been, searching for various narratives over the years, and what they would call like killer applications that are going to bring a bunch of people into crypto and use all these altcoins for all these various forms of quote unquote utility. And I think what we're seeing is like the killer app is just sound money, and credibly neutral sound money, which Bitcoin is. And in my mind, like I don't see this trend reversing materially from here. Like I would say, I don't think Bitcoin dominance goes back below 50%, that line there that I show. I don't think it goes back below 50% ever again. And part of the reason I think that is because, well, where is the capital flow coming from that's driving Bitcoin's price right now? It's not entirely retail. There's probably some retail, but it is more institutional, sovereign corporates that aren't looking to stack the new flashy altcoin. They want credibly neutral sound money. That's why they're interested in Bitcoin. They're not interested in it as a emerging technology play. They're interested in it as a store of value. And so I expect this to continue to grind upwards. Michael, I know you've been sort of taking the other side of this argument, thinking that there will be some sort of proverbial alt season. I just question, like, where is it going to come from? Because we're seeing ETH bleed out, and yeah, maybe some of that capital that was in ETH is flowing into the Solanas of the world and these other altcoin layer 2s or layer 1s that people like to still hype up. But on net, like, that's not really cutting into Bitcoin dominance in my mind, because the massive amount of capital that's literally just focused on Bitcoin doesn't care about Solana, etc.
My
Yeah,
favorite part about, oh, go ahead. No, you go ahead.
Yeah, I just want to share, like, I also, well, I think people will try to have an alt season. I mean, I've been saying for a long time, these crypto traders say rotation into alts, right? The people take their profits from Bitcoin and then they put it into alts. But like the altcoins, crypto had like inflation in numbers and therefore debasement of every existing crypto, right? Like, I feel there is a blob of money, people that are in crypto that are trying to make money, and they are following, they're moving around from one token to the next. But yeah, I mean, it's been so diluted. This pool that this capital is chasing is now so diluted that, yeah, it's just gonna be really hard to.
And that's also that behavior you're describing of, like, okay, now we rotate into alts. Like, that's a retail behavior, right? Like, the nation states who are stacking Bitcoin are not going to rotate into alts.
Yeah.
Exactly.
So Brian shared all that, but he won't make a bet against it. So that tells
I'll
you
make
how
a bet.
much
I'll make a bet.
conviction.
It's not going
conviction
below
and
50. It's not going below
confidence.
50.
Okay.
So a few things. The one is, like, over time we should really look at, this is an aside, but we should add the equity markets to the dominance to this, because I think that's what's really going to matter. But I think Brian on that note is directionally right, but wrong on the time frame. I think it's 4 years from now, and what I mean by that is, the theme, Safe says that Ethereum is the mother of all shitcoins. Is we're about to see the mother of all liquidity, like the mother of all scam seasons come in the next 2 to 4 years. And the easy example or sample size how to reference this is there's two precedents. One is we are at the time frame, in my opinion, pre-2000 bubble. So we are on the precipice of all the capital commercialization of digital assets, Bitcoin, stable coins. You just had a Solana ETF or whatever, publicly traded company do whatever they're doing. You had Trump coin just like rip. So you're in this understanding the administration's coming. And what happened previously with all the things Brian referenced was the sample size of the total cohort that we're describing was like so small. It was such a small example. So whether it is the awareness of people that understand these things are scams, the amount of understanding and sound money and everything under the sun that relates to understanding this ecosystem has taken most individuals months. We talk about 400 plus hours of recording. We're going to talk about Brahms tweet about somebody listening to these podcasts. Like, they don't wake up and just come directly to Bitcoin because unit bias kicks in. And sovereigns aren't all going to just adopt the one form of money. We talked about it, like with China and India adopting the wrong form of money and them being set back for 100 years. So ultimately, I don't know where it ends up. I probably ends up less than 50% because I don't know, because those numbers too on the trillions in market cap for crypto, we all know they're BS, but they're still there. Like, they're still there. So the money, they're super illiquid, low float, and you can pump those things up. There's a lot more to say, but point being is, like, I don't think that we just said this dominance going forward. If Bitcoin's $350,000, it's the similar argument to like how people before would think, well, Bitcoin was 30K and it just needed to get to X, like 500K to reach gold's market cap, and they just thought gold was static and that like gold didn't move. And it's the same acknowledgement here. It's like all these people coming in, regardless, there will be cycling coming out of that because people are going to get wealthy, and when people get wealthy, they do speculative things. And so anyway,
yeah, it's fair. We'll see.
I love how Mike is on like a contrarian seat for the past few weeks, also in our other conversations. I mean, he's into gold, he's into crypto, altcoins. What's going on?
The reality is, and this is where it goes back to the real thing of like, do you want to make money or do you want to be right? And being right is, I'd love to take the position of like gold Bitcoin supersedes gold, gold goes away. Altcoin no alt season ever happens. The problem is all day long, I just talk to these institutions, I talk to the clients that are trying to figure it out, and they can't wrap their heads around Bitcoin versus everything else. So to assume like we're just going to like bypass it all after having all these conversations, it's just hard to do. And especially being in this. Yeah.
Would you agree though that relative to the last cycle, so relative to 2021, there is a broader understanding that Bitcoin is different? Like I think there's a bit of material change in that narrative. Like I think more people understand that Bitcoin is different than the rest of it.
But if you realize how early we are and how, I mean, people got burned along the way with crypto, that you kind of got a shitcoin before you Bitcoin, because you have to use and try to make money of these other things, and then to eventually realize, I've been distracted the whole time. I mean, that's needed.
Yeah, and it's all relative because when you think about it, so sure, more people are recognizing Bitcoin is different than crypto, but at the same time, we just had an SEC chair step in that's crypto friendly. We have the nihilistic notion of like speculative, not only memification of stocks, but also gambling coming across at all-time highs, to assume that like people can't think that they're going to not get rich and go play this, including sovereigns, nation states, family offices. Just is not understanding human behavior. So like when you keep saying it, I'm just like, it doesn't make any sense to me. And you keep saying it publicly because it's going to be wrong, and then the bet's going to be wrong. You're like, oh my god.
Okay,
it's not going.
I do agree. I agree with this. I actually there's a company, or there's now a fund that has like 500 million to buy Solana. Yeah, to buy Solana and basically copy the Michael Saylor playbook. But then people were replying, no, like the Michael Saylor playbook is you buy the best thing, guys. But anyway, good luck, and see where you can get leverage to borrow money to buy Solana. But I think that is what Michael is referring to. Like this is just going to happen anyway, and I have to agree with that. Michael, we'll stick with you because I don't know if you sent this tweet because the link was broken, but I have several of these tweets. But you shared this one.
Yeah, no, this is the tweet. So this goes back to one of my favorite memes that Brahm is, incepting into the world, is like, just don't stop talking about Bitcoin. I reference this because I'm kind of gotten a little disenchanted with all the noise with just publicly traded companies and just like all this crap that, like, at the end of the day, the thing that really matters and how you're going to affect change in the world is individuals learning about this stuff, and it starts at the individual. And this gentleman, the tweet bringing up, referenced, and it was all organic. And I saw in your notes, somebody's like, oh, really? Like you were paid to post this or something. It was a gentleman that just came into Bitcoin, listened to Brahm's podcast, heard the on-ramp advertisement, randomly talked to multiple of us. Like we didn't even know any of this. He randomly got on a call with me because he somehow we got connected, and listened to a bunch of information, and has just become insanely convicted. That's a testament to how much the great quality Brahm has done, but everyone across the space, that the signal is a lot tighter. But to add to that, since we launched the guild, we've had a lot of individuals reach out, because the notion of the guild and what I talked about with Brahm and why Brahm was excited to partner is there's no shortage of like world-class people that effectively feel like isolated. They're at their company, they're kind of doing their thing. They can't talk to their friends about it. They can't talk to their colleagues about it. And like Twitter is great, but it's only so good for discourse. And LinkedIn, we already know it's not really good for much. And so the point being is that this past week, I've talked to at least 5 different individuals, that from physicians that were just trying to make ends meet, or just going to the grocery store, realizing like the cost of groceries are more, and they went down a Reddit rabbit hole of understanding like what's happening and buying Bitcoin, to individuals in insurance. A filmmaker we talked to the other day that like I had onboarded with us said that, and I mean this is exactly word for word, his wife had seen him less anxious because he just wasn't worried about custody. But then ultimately he's a filmmaker, and there's something that he did with a Bitcoin company that's going to come out. I don't want to reference who it is if it's not public yet. But point being is, at the end of this call, he was like, I never had felt my like ikigai, that moment where I was just in flow because I was doing what I'm good at, but I was also focused on Bitcoin. And that's this whole notion of like, don't stop talking about it. Don't stop thinking about it. Reach out to individuals at companies, see how you can produce value, reach out to us, because that's ultimately how you really are going to like affect the change in the world, is being close to what you're good at or what Bitcoin needs. So anyway.
Yeah, it's very well said. I think Brom, I love these tweets that you've been sharing of people reaching out to you. Similarly, I was up in Boston last night for a Bitcoin meetup. Shout out to Jeff, who runs Mass Adoption, the Bitcoin meetup in Boston. And it's always great to like see people in person, Bitcoiners in person, and very similar sort of feedback in terms of people are listening to the pods, people are loving the content, and genuinely learning from it. And I talked to one individual who is working as a financial advisor in TradFi world, and he was like, everyone sort of jokes about Bitcoin. My colleagues literally like make jokes about Bitcoin still, and he was mentioning, I still keep things close to the vest because he's been investing in Bitcoin himself since like 2018, and is very convicted. And I was like, dude, don't keep it close to the vest, man. Like talk to these people, let them know that you have an opinion on it and you've actually educated yourself on it. Don't feel ashamed or awkward about it. Like, go back at them. Like when they sneer or laugh about Bitcoin, like provide actual information to counter their points. And so he received that well and was like, yeah, I think you're right. Like, I don't know why I've been like afraid to combat these people who literally know, next to nothing about Bitcoin, whereas, he's been studying it for years now.
Yeah, I love it. I think it's really nice that you pulled that up, because actually, because the link was wrong, I was searching for like the tweet, and I thought like, I have to search on Twitter for like, don't stop talking about Bitcoin. And I have a lot of these tweets now, actually.
Yeah.
Like, I hope it becomes a meme. Like, I hope other people are going to share it, because it's just amazing to talk about what I'm like super interested in, right? Like I wake up and I think about Bitcoin, and I still learn every day myself. I think every week, my mind gets blown about the asymmetric opportunity, what kind of people are getting into it, what kind of legendary finance people sometimes say about Bitcoin. And then, it makes me think about, this is so big, like I'm really going to think about this for the rest of my life. And then when you just decide to talk about it, like, and just share your thoughts and ideas on the internet, and like do what we are doing now, you can actually reach real people, and you can actually help them change the course or of their own life. And it's just because we are talking about something that deeply interests us. And yeah, I just think that's amazing. Like you can just do that. Like, yeah, what we talked about before, I think like you can just do the things. So it's just, and you should do the things, right? Like don't stop talking about Bitcoin. If you enjoy it, learning about it, I tell everyone you should start another Bitcoin podcast, because how you talk about it, will reach different people than how I talk about it. And that's amazing. And we have 7.99999 billion people to go to learn about Bitcoin. So there's an endless opportunity to share your own thoughts. And then, I would encourage everyone. So yeah.
And making money, like, I mean, we all enjoy this, but the reality is a lot of people talk about risk adjusted, better time to de-risk and the underlying asset. I would make that. I think that's true, but risk adjusted to build a very big business and to make a large amount of Bitcoin, because most people feel tapped out. They only have so much fiat. It's like right now with this mass commercialization, we talked about the 2000, wherever we're at in an adoption cycle, things have to be built. Like it doesn't just happen by itself. It's not going to happen with Coinbase or MicroStrategy holding Bitcoin. Like these things have to be built. They have to be used. They have to be saved. Wealth managers, insurance products. And so it's like, it's an insane time. I pinch myself every morning, similar to you, Bram. So yeah.
Yeah, I love it. All right. Next one is, also a tweet of mine, because this is one of the realizations I had. And I've had this before, where I realized, with fiat money, you basically borrow economic energy from the future, and then you promise to pay it back later, right? But when you pay it back nominally later, the amount of units is worth less in that future, because the fiat money is debased. So we can go all into that, but I don't know even know which podcast I was listening to. But then I realized again, with Bitcoin, you can actually send economic energy towards the future. So you're not taking from it, you're sending to it, and you're sending units in Bitcoin to the future that actually increase in value. And so if you think about why should you pay attention to Bitcoin now, right? Like we talked about, there's all these altcoins. Bitcoin is still number one. dominance rising, etc. But I think this is, at least for me, a case in how some people could think about it, right? So we know that Bitcoin is deflationary. The issuance will be less and less and less over time. And then when you combine that with, for example, Saylor's thesis, right, on price, which is actually, underlying of his entire strategy with his company, is this thesis that it will be, in a base case, 13 million per Bitcoin in 2045. So that's in 20 years. And so then I looked at what's the block subsidy after the 2044 halving. That's here, right? So we are at this one now, 3.125. We go to 1.5625, and 2044 it's 0.09765,625. And so if you think about that today, okay, if I would want to retire as a millennial, right? I talk about the millennials. That's in 20 years, and you're like mid-50s. You're like between your 50 and your 60, and you would like to retire. Well, you probably need a few million in value to retire. Like, how could you get there? And so if you follow Saylor's thesis of the 13 million in 2045, and you understand that the block subsidy then is this 0.09765, that today that is $8,652, and you can buy that one block subsidy that, if you follow the price thesis of Saylor, would be worth $1.26 million in 20 years. Then of course people will say, like, okay, what can you buy with $1.26 million, right? Maybe one bread, okay, we'll never know. But it's more about the opportunity that you have to actually take money out of the fiat system right now and basically send it to the future. Because if you now take $8,652 units to put into your dollar-denominated pension, then you definitely know that in 20 years that buys you less. So this, for me, is really the opportunity, especially also for younger people. If you can wait, if you can hodl for 20 years, this might be where it's going. And so I added to that, like, once you understand you can send economic energy towards the future, why don't you adopt Bitcoin? Because anything you conceptually send towards the future, right, units you put into your retirement account right now today, they will be worth less. So of course you're incentivized to spend that today. So just a little thought experiment there. I'm interested to hear your thoughts, guys.
Yeah, I love it. I think what I go back to is one way that Ross Stevens from Stone Ridge describes kind of what you're alluding to, is like Bitcoin allows you to propagate value into the future, and it's uniquely saleable across time, is how he describes it. And really all that means is, again, you're able to propagate that value to a future date without it eroding over time. And anything else you would put your capital or your value into is likely to erode over time. And so it's the other thing that this made me think of is just like, there is not only unit bias with Bitcoin, but just this notion that people think they've missed it. Like I was talking to someone yesterday who, has been historically skeptical on Bitcoin. And, the last time I spoke with her about it was probably 5 years ago. And, the price has moved up pretty significantly from then. But she was still couldn't really fathom, like, you really think this is going to $1 million a coin? And I was like, yeah, it's going to 10x, and it's going to 10x again, and then it's probably going to 10x again. Like, there's a trajectory here that, maybe there's diminishing returns over time, but like relative to everything else that you could, again, store your value and try to propagate it into the future with, it's going to outperform that. And so it's, stuff like this is just very illustrative. So a good tweet by you, Bram, to just like really just, lay it out in plain English, very simple math. Like, this is how you can retire in 20 years.
Yeah, the thing that comes to mind is a lot of these concepts. I think, like, I was just thinking about it like a slide in the deck to explain this stuff to individuals. But what came to mind, Bram, when you were explaining this, is a concept of like how Bitcoin propagates and holds more value, like energy, economic value, but then the network in return allows for more value to be transferred. And the thing that I remember back in 21 talking to prospective clients about the easy math is like a Tesla 10 years ago. If you wanted to buy a Tesla 10 years ago, you needed to send 100 Bitcoin, right? Let's just call a Tesla $100,000 and you need $1,000 Bitcoin. And then just fast forward 5 years, well, you need 10 Bitcoin for the same Tesla if you're buying it from China or wherever you're going. Like you're sending that value, you can get for 10 Bitcoin, 1 Tesla, the amount of economic output for $100,000 in the world. And today, that's 1 Bitcoin that can get you that same Tesla. And so it like anchors what everything you guys were just talking about, like to an actual like thing that somebody can tangibly like understand. And as that grows in the future, there's more value coming into it that's being taken from other assets and then allows for economic coordination activity. So yeah, I think all of that's spot on. And these concepts are just like really good to talk through and distill because it's what helps people's mental models of understanding like how this is actually happening. Because it's hard for people to wrap their head around. Like we talk to boomer individuals that will send the Bitcoin and for years will send it and want to send it back or get dollars just to prove you can actually sell the funny money for like potential other real money.
Yeah, that's great. Actually, another thing I'm thinking here is okay, because people say like, oh, in the future, you know, Bitcoin security, if you know the block rewards go down, you know, what happens to the incentive to secure the network, right? How much do you earn per block? Actually, we're now talking about it, right? So 3.125 Bitcoin per block now times, let's say 100K, right? $310,000, and based on this, you know, of course, you know, you don't know if it's going to be true, but there's an underlying calculation with, you know, the Saylor thesis for the price. Now we're looking at 1.26 million per block in 20 years. So there's a big range between $310,000 now and 1.26 million in 20 years. But anything higher than what it is now would actually be an incentive for miners also in 20 years. So that's just one little thing I wanted to add that I thought could be interesting because, of course, you know, the whole idea of Bitcoin is that more value is stored in Bitcoin. So Bitcoin itself becomes more valuable, you know, compared to any other asset. So that is, of course, the underlying Bitcoin thesis that it's a better way to store value. And then, of course, it either works or it doesn't. You know,
yeah, it's a good call out. It's a great call out because I think, you know, I would go as far as to say like people that are legitimately concerned about Bitcoin security budget are like somewhat, you know, inherently bearish Bitcoin price, as you just illustrated there. And also probably don't understand fee markets and block space scarcity. So yeah, it's worth calling out that, like, you know, if you have a constructive thesis on Bitcoin's price appreciation, like you worry less about security budget implications.
Yeah. What just one thing on that is it's an interesting thought experiment or like understanding of maybe it's a topic for a different day, but the whole notion of the like kickstarting the network from a miner perspective and the halvings and like what the initial, you know, first call it 20 years of Bitcoin's existence was meant to be when it comes to the block subsidy. And then, yeah, to Brian's point, there's very smart people that also are very positive Bitcoin, but also have the person that comes to mind is Nick and the Castle Island guys, because I think they've been very favorable to like worrying about the fee emission and or tail emission and all that. It's just like not only it's not rational from the price appreciation, but if Bitcoin's used, it means that it won't be used and it won't find value. And if it increases in value, that means people are finding value and it'll naturally cost something to be used and spent. And so,
yeah, I agree. All right. We're moving on to you know, our bullish or bearish parts. Just you know, some little things that we found that we think are bullish or bearish for Bitcoin. I'll start with one of mine, which I quote posted, and I said, Google the uptime of Bitcoin. So this is I don't know which bank this is in which country. Oh, yeah, this is in Australia. And they said, we are aware some customers are experiencing intermittent issues accessing the Combank app and NetBank. We are working to restore them as soon as possible. Other services, including ATMs, online and in person, including Tap and Pay, are working. So they need to communicate which parts of their financial service outlet of the grander financial system is working, which when I think about these arguments around quantum computing, will Bitcoin die? Think about your own bank. Most of the banking software is written in Cobalt, which is a coding language from the 70s. Like you would have a big problem there. And something also happened in Norway, where Sweden. Bank ID, Sweden's digital identity backbone is down with 8.6 million users. The system is used for everything, logging into banks, paying with Swish, our instant mobile payment system, accessing public healthcare, and more. So, if you have a centralized, a crucial centralized system in a country, then when it's down, it's really down. And people cannot do things in their regular life. And so, I just thought highlighting this, I think is bullish for Bitcoin, because Bitcoin's uptime is 99.99998% or something like that. And so that will always, or that will propagate into the future. And I mean, eventually you could even build on Bitcoin, creating identity, stuff like that. And you could actually make similar systems to these that are down in these countries. You have some thoughts?
It reminds me of that stat that has circulated at various points. That's like, Bitcoin's uptime, its total trading history, et cetera, exceeds the entire history of the stock market and its trading hours. I always love that one when it gets resurfaced, because it makes someone on the outside step back and be like, oh shit, wait, like, okay, this is something wholly different than any other sort of infrastructure or system that I'm familiar with.
Yeah, Mike, any thoughts? I see half your face, by the way.
Oh, sorry. No, I think it all makes good points. I was thinking about just banks in general, and the notion of like they're gonna have to adapt or die with this whole system.
We'll move to, I think this was Brian.
Yes. So this was, on the surface, not super related to Bitcoin, but I'll make it make sense. So this is the CEO of Flexport, which is sort of a shipping logistics business, and he's basically saying that since the tariffs were put into effect, ocean container bookings from China to the U.S. are down over 60% industry wide. And he goes on to sort of describe the implications of that. And the key takeaway for me was sort of like traditional assets, particularly equities and businesses that have ties to, getting stuff from China in particular, are not out of the woods yet in terms of like tariff uncertainty and particularly supply chain challenges. And so what he goes on to say is like, even if the tariffs were relaxed, like in pretty short order, the impacts of what's already happened is going to create some downstream implications sort of over the next several months. And so why does this matter? Largely because like Bitcoin doesn't care about this. And in my mind, why this is bullish Bitcoin is because a lot of this pent up uncertainty that is going to continue to play out this year, it actually, in my mind, gives Bitcoin the opportunity to continue. There's been a lot of like decoupling talk about Bitcoin and actually performing on its true merits as a risk off asset. This is another opportunity for Bitcoin to continue to diverge and distinguish itself as something that is truly risk off and very insulated from the various risks, including trade and tariff wars that he's outlining here.
Yeah, you know what this made me just think of, and I haven't thought deeply about this, but like how tariffs are really like such an archaic construct because of the fact that I would imagine a lot of tariffs, or they have to take place at the port. They come in, it's the company that's importing them, paying them, and then they get pushed back to the consumer. And let's say, well, if you're in the U.S. and you like tariff for any country, including China, persisted, and to buy something via Visa or wherever your traditional rails, there's gonna be some firewall. I don't even know if this is how it would take place, but you couldn't buy things directly, or they had to. I think that's what happens with Nvidia. They send it to Singapore, and then they were sending them to China. Point being is, when you have a borderless form of money, you could just buy directly. and you can get it shipped. And so like it's just a very random or interesting, like the mental model of how they would enact tariffs for a long like time. Now that you have a borderless form of money that doesn't have a central like choke point, it literally changes that dynamic. Maybe not like ASAP, but it's the whole thing about prohibition, right? Like prohibition, you couldn't really ban booze. You could just like kind of, you know, slap people on the hands for having it, but it flowed because it was a commodity good that people wanted, in the same way that these things are valuable. And if you have a form of money that, again, doesn't have a choke point, you can just figure out how to get them independent of the, so anyway, I haven't thought deeply about tariffs, but that stoked that thought when you shared that. That's all I got.
I do also think, you know, eventually Bitcoin will be used in more global trade. Like I think there's quite some damage from all the tariff stuff. That, you know, eventually, if there is a renewed trust in trading with each other, I think there's a second question that is, you know, what kind of currency do we use to actually trade with each other? Like, should I use, you know, your currency if you are actually, you know, should I receive your currency if you are buying something from me? You know, so I think that's going to be interesting to see develop. Michael, this was yours. I don't have a Wall Street Journal plan, so we can only read the headline, but that's probably enough.
Yeah, I randomly got one because there's a few Wall Street Journal articles that have come out this week, but that are really interesting. This one basically says crypto knocks on the door of the banking world that shut it out, and then the subline is Circle, BitGo, and other crypto firms plan to apply for bank charters. In the article, it's describing some for narrow licenses to issue stable coins, others for a little broader to take cash deposits and bake out lending products. And I think of this as very bullish in a sense that now you have the banks looking to integrate, and we talked about how they most likely won't be able to build, so they're probably gonna have to buy a lot of this infrastructure. But also M&A usually is not the best recipe for success over a long time horizon. And so now you have crypto native firms that are going to look to become the bank and vertically integrate the client's financial experience with Bitcoin and digital assets. I think it's just like insanely bullish because once this stuff, and that's where like I kind of get a lot of crap for it, but I think where stables are just going to play such a huge part in the digital ecosystem is because if you just have digital money in a dollar form across websites and across every application you interact with, it's just that much closer to swapping for BTC in any form across any website or any application. And I think that in itself is such a huge tailwind for like Bitcoin's price and adoption in general. Because imagine being on any website and you're seeing this one buy less, and then you see this one increase in purchasing power, and you're like, well, why am I not buying more of this one? And over time, that's how like you can, you know, naturally gain adoption.
Yeah. Well, to tie that in with, I brought two more items, and to kind of like tie that in with, you know, TradFi banks, this launch of the new 21, which is now still called Cantor Equity Partners stock, right? So they're really going to do the Sailor playbook, but even with a more designated vehicle. It's ripping. It's $28. I bought at 14.9 yesterday or something. It's crazy to see. So what I like about this is it's just everything is so new. You know, like this is new, and people are finding out about Bitcoin through this. You know, and eventually we are all for, you know, really, you know, owning Bitcoin yourself. Don't buy ETFs and stuff like that. But this is all part of it, right? Like what we talked about before, with just the path is the path is the path. I mean, like, look at this.
I will call out that I would be somewhat hesitant to just ape into this right now, because what I think there's some misunderstanding in terms of how basically a SPAC merger works, where this entity that you're looking at on the screen, I believe, will own like 2.7% of the merged entity. And so I saw people on Twitter last night like doing incorrect calculations
moon math
based on like, oh, they're going to have all this Bitcoin and this stock's at like 200 million. Like, obviously I'm going to ape this. It's like, well, no, like that's not actually the math here. And some people were doing the correct math, and it's like, if you're equating, you know, what the ultimate MNAV of this merged entity, if you're just saying it would be equivalent to MSTR, just for simplicity's sake,
Yeah.
then like the fair value of this particular stock right now would be like $12-ish, $12 to $14.
Well,
It's just to call that out.
I aped in. I'll tell you that. All right. Yeah, I have a last one. And I don't know if we talked about this before, but yeah, I don't have to show the tweet. This is sometimes I'm on like my little tweet chair, you know, and I tweet stuff that later I'm reading. You know. Anyway, you know, actually today with this one, I really think that I still agree with what I tweeted here, right? So I said, anyone looking at this table saying Bitcoin is a Ponzi pyramid scheme, scam, bigger fool asset, etc., is just an unsavable soul captured by their fiat ego, I should have said. But I mean, this is something that we've been looking at for years, obviously. To be honest, I do think, and someone commented on that as well, you know, this one here, you know, you should add like real estate, etc., etc. But so I partially agree, but this is a single asset, and real estate is not like one single asset, right? I think as BlackRock has said, like Bitcoin is an asset class by itself. So it should also be here, but this is just, I think, also a nice graph to look at in a sense. We've seen Bitcoin climb, and what I take away from this graph the most is, I mean, for you probably it's the same. When you grew up, you heard like you gotta have silver and gold, right? Like that retains its value. That's the narrative that we know. But if you say that today, it should be no, it's gold, Bitcoin, and then comes silver. You know, and I think that is. I like that thought to just think, same as with mobile phones, right, or the internet. There are people growing up right now that will not know a world without Bitcoin, and they will look at this chart and hear their grandmother or grandfather talk about gold and silver, and they will know that, you know, in their age, in their time of living, it's gold, Bitcoin, and silver. And yeah, I just think it's really cool to see how Bitcoin is climbing here, and
I love this chart. I love this chart. It's not perfect, as you mentioned. Like you could probably also add like fiat currencies to this list. Bitcoin would still be high up on the list, but it's just a nice, very clean picture. Like what you're describing of like, you know, historically what people have perceived as like the savings vehicle. I would say for the past 20 years, it's those other things on the list. It's the Googles, the Amazons that people perceive as the savings vehicle. And yeah, Bitcoin's just marching higher and higher, getting closer to that number 2 spot behind gold.
Yeah, there's a lot you guys covered. I think the thing that's interesting from a mental model for some that doesn't get a lot of burn is Bitcoin's just a startup, and it's the fastest growing startup in history. And it's already at $2 trillion, and, you know, with a lot of room to run. And then referencing, what is it? Larry Fink, you know, 12, 24 months ago said it was like rat poison used for drug dealers. You had, you know, the Fed governor also reference or not even speak about it, now talking about it, and the sovereigns and administration, like that would have been unheard of 12, 24 months ago. So imagine 24 months from now, like where that sits on the chart. And then also, what's like achievable from the fastest growing startup that you've ever seen. It's pretty insane.
Bullish.
Yeah. All right. Bullish. That's a wrap up right here. Thanks again, boys. This was a really nice chat. I hope people enjoyed it. Please let us know in the comments or wherever you watch or listen to this. Follow us for our own thoughts and ideas around Bitcoin and some updates in between. And we'll see you in 2 weeks. Thanks, guys.
Thanks, guys.
Thanks, boys.